Hey traders, this is Christian from Hertz, Tribeca Trade Group with your Thursday afternoon market recap. And happy St. Paddy's Day. And markets continued from yesterday's move after the Fed announcement that there will be most likely less rate hikes than originally planned from December. So we did see a move higher in the indices. S&P finished up 60 basis points. Qs, interesting, did not perform. We'll get to the Qs in a second. They were about flat for the day, and IWM was the big winner, up about 1.5%. So coming back after some lackluster, a couple of days where it underperformed this week, it actually caught up with S&P today, gaining about 1% more than S&P did. So I have up in front of me a chart of Adobe. That was the one name that reported earnings after the close. Very nice beat across the board, bottom line, top line, trading at about 96.60, about a 6% move from the close. It actually ran into the report today and then blast off. If you look at where we are in Adobe, very close to, it looks like we're just now above the high of 96.42. So pretty interesting move there. Let's get to the market recap today. Again, interesting movers. The dollar, what has the dollar been doing? Another hard day of selling off, down 1.1% today. And this really has a lot of effects on a different, some different sectors. What I talked about last night is sectors that I was looking for unusual option activity today. What performs well when the dollar sells off? Multinational companies that have a lot of operations overseas. If you remember, that's been a big theme for 2014, 2015. Everybody was kind of whining about a strong dollar, and it was really hurting their results. A lot of those companies were in the industrial space, were in the consumer staples space. A lot of those companies that have multinational operations, also big technology companies that operate overseas as well. So taking a look at some of the best trades of the day, take a look. I jumped in this one right away. This was exactly what I was looking for. Having been prepared for to get into those particular sectors if we saw unusual option activity. We saw EMR, big block of these April 52.5 calls. I purchased these for, I actually had to pay up. I was a little bit late getting into the trade. I think I paid about $1.13. They marked up to about $3.30 today. So huge winner in EMR. That was the Tribeca trade of the day. The Tribeca Trade Group trading room trade of the day was EMR. Huge winner for the trading room today. Other names that saw unusual option activities, just sticking with that theme. Coca-Cola, huge amount of call options traded today. This is a name that I've already been long, was up 1.6% today. Again, if you take a look at this chart, this is something that I talked about right on the breakout, which is why I actually got long. I did not get long unusual option activity. I got long because of the technicals. Take a look at a 5-year chart. Notice that we are seeing a breakout. You can actually draw a trend line here. I'll just do this very quickly. And you could see that we punched out here. So nice breakout here. And we actually tested back here. You actually had an opportunity to get involved if you missed the breakout. Here was a nice, looks like it was going to break below and closed above. So really nice looking candle here. That was actually yesterday's price activity, and boom, off to the races here. Some other names that were interesting today, more in the consumer staples space. Procter & Gamble, a lot of call buying here as well. This was the order that I was watching, the May 85s. Not really looking at too many of near dated things. I'm looking now for May positions and further out. But Procter & Gamble looks pretty good in the charts as well. Also moving higher here. I would look for a breakout right above, let's say, call it about $83, 83.5. A break above here, and we could be off to the races. But also another company that's got a lot of overseas operations and will do good with a weaker dollar. And then finally, we saw, not finally, but XME, another big name for the metals and mining space. They continue to chug along. I think this group is up something like 70% versus the lows. XME, here was your reversal candle, 1187, now up to $20, actually, so a little bit more than 70%. This is what it was in the beginning of the day, but just took out the highs, and just a powerful move in this particular space as the dollar gets weaker and commodities continue to rally. Oil, continues to move higher. 41.68 today, closed very close to the highs. So again, taking a look at these effects, a weaker dollar, stronger commodities. What's another group that's doing very well with those particular two moves? Emerging markets. Emerging markets continue to rally. I had pointed out in yesterday's video, huge amount of positioning going into emerging markets. I've also talked about that in my newsletters over the last couple of weeks. Emerging market inflows, we caught that in the Tribeca trading room, as well as that we've been seeing emerging market inflows for the last 3 or 4 weeks. It's exactly why I watch fund flows, is because you started to see positioning going on in emerging markets. They've attracted about $3 or $4 billion in the last 3 or 4 weeks, and not just in EEM, VWO, EMB, which is emerging market bonds. What else? Also in EWZ, which we saw a lot of call buying yesterday. Taking a look at EWZ, again, we saw decent sized call buying yesterday. Let me just bring up that. Again, I had highlighted this in yesterday's video, 22,000 March 24.5 calls being traded. EWZ finished up close to 9% today. So if you're just looking at the S&P, if you're just looking at FANG stocks, you're really missing out on this market. The FANG stocks, they all underperformed today. It was not where the action was today. It's not where the action has been over the last month. You really have to get away from those types of stocks, because there are different horses that are now pulling the market higher. We've got a whole different participation going on. Besides EMR, take a look at General Electric today, up 2.6% today, and starting to break out. I actually put an alert. I did not trade GE today, but noted the performance earlier in the day. 31.49 is what I'm looking for, as a break above, and I will be playing GE to the long side. But again, fits that theme of a weaker dollar is a very good positive for GE. What else do I have written down here? Another name that I'm looking at is STZ. And, unfortunately, the options are very wide in this particular name, but this name got upgraded earlier in the week. Constellation Brands was upgraded by, I believe, SunTrust earlier in the week, and is starting to move nicely to the upside. So real nice move as well for that stock. Also IBM, another name that has been a dog for a long time. 6,000 call options in IBM. I did play this as a day trade. Don't really want to be into too many positions going into quadruple witching. So I did, today was one of those nice trending days. We haven't had a bunch of trending days, but we definitely got it today. So a number of consumer staples, number of old school technology companies, and a number of industrial companies really moved to the upside and had nice trending days that you could have gotten into early in the day, watching that US dollar grind down. So one thing I'll point out is quadruple witching is tomorrow. I did reduce some risk today. Why did I do that? Because if you look at the past quadruple witching days, which again, no guarantee of future performance, but you could see going back to the last expiration day, the SPX declined about 1.8%. If you go further back into September, negative 1.6% on the previous quadruple witching. If you go back to June, I think we were only down about 50 basis points. But nevertheless, something to be cognizant over, as there is a lot of volatility that usually takes place in terms of quadruple witching. The last thing that I'll leave you with is everybody likes to focus on SPY. Something to be a little bit aware of. If you take a look at the last time that SPY got to close to 70 on the RSI, which was the beginning of November, take a look. We actually, and same thing with MACD, was very mature. You didn't see a crossover until about here. But notice that we're getting to some mature levels here. Look at the RSI now, not quite as high as it was in the beginning of September, which was about a 70 reading. We're about a 68 right now. It actually backed off from the highs. But same thing with the MACD. The crossover is getting pretty mature here as we're running about a 2.9, very similar to where we were back in that beginning of September. So something to keep an eye on, something to be a little bit aware of, and how you're positioned right now. What I am looking at is, if you want to continue on the long side, I'm looking for sectors that are going to do well versus sectors that are not going to do well. If you take a look at biotech, we've continued to see outflows. Interesting, it did come back here at the end of the day, almost a hammer-looking bar or hammer candle that developed today, but still, it got very close to the February lows and bounced. So we'll watch the price action tomorrow in biotech. But biotech and financials seem to be underperforming. Financials actually gained 1.2%. They did come back today, but these are two sectors that I'm looking to avoid right now, and I'd rather be in position in those areas of the market that will do better with a weaker dollar, such as consumer staples and industrials. So that's it. Thank you for joining me for Thursday's market recap, and have a great St. Paddy's Day, and I will see you tomorrow.